Hello, in this video, we continue to learn the levels of investors. And we're getting this from the book, The Cashflow Quadrant by Robert Kiyosaki. This is video number 46. Join me. Hello, welcome to Take a Step to a Better You. Here I share what I know and continue to learn. And in this video, it's a continuation. If you've been watching me, we're discussing the level 2 investor. If you are new, my name is Sherifa Nakalema. I'm a business owner here in Virginia, USA, and I'm very passionate about making our life better through earning more money. So my topics are about money and business and personal development, motivation. So if any of that sounds interesting, please click on the red button, subscribe to the channel, and on the right, when the bell comes up, click on so get notified when I have new videos. For those of you who are already supporting this message, I appreciate you very much. You know what you have to do. So thank you, appreciate. Now, I'm here daily, 12:30 p.m. USA Eastern. Please see the schedule. I don't have to explain it too much, except I have to explain that on Thursdays, we see books, but I bring something different. Sometimes I'm driving, I'm interviewing someone, and then on Friday, I come live, and Saturday also. Soon it may change. I'm testing. I'm coming live more. So I did a second live. It was interesting. We were discussing needs and wants and budgets. So, but I'm also bringing affiliate marketing, earning money online. So 2 lives, Friday and Saturday, and then Sunday is motivation. Okay, that's the schedule. I may update it soon, but I'm here daily. That's why I need the notification so you know when things are happening. And also this book is called The Cashflow Quadrant. This video is about the investor, but before I get to the investor, I have to explain why this story is continuing. This is video number 46. According to Robert, we earn money from 4 quadrants. He calls them quadrants. Either you're an employee or a self-employed person. Okay, E is for employee. S is for small business person, small business owner, or small business or self-employed. Then on the right, we have, my hands could be showing the opposite because of camera. On the right, you have a business owner. This one is a larger business, and then investor. But this video today is about the investor. But those 4, I keep reminding you that's the book is about those 4 quadrants. And Robert is saying we should work hard to be on the right, either business owners, investors. Okay. So in the previous video, number 45 was the level 1 investor. And Robert says there are 5 levels of investors. So we started number 1, and every video is going to have another one. So today is level number 2. So if you want to get to the level number 1 that you missed, in case you missed it, I put a link in the description, but also in the pinned comment. To make it easy, I pin a comment in the top comments. That will be the previous video. The previous video, number 45, you can go watch it. But then also in the description, you'll find the link to this book, free audio, for 1 month, and also a real physical book if you want to buy, or in my website, honestsoul.com. That's where you find the details about how to get the books, okay? Including this one, the Rich Dad Poor Dad that I finished. Because I'm rushing a little bit, because I feel like we have to finish these levels, I have to be recording shorter videos also. So now I'm going to reading, and this one is actually a little bit of the longest. So what I did, I'm skipping some sections because he's explaining it a little bit, not, I found it not to be very interesting. I don't want to discourage you, the level 2 investor, but I marked some areas, I skipped some so that we get the point, okay? Made it a little bit long, but the rest are short. Okay, level 2 investor is, remember, level number 1, at least, even if you haven't watched the video, I'll give you the name. The name, number 1 was called a zero financial intelligence investor. And that was number 1. And in my life, it was fun. I was asking people, where are you? They said, I'm 0. I'm here, I'm 0. Where are you? Okay, number 2. Number 2 is the savers are losers level. Savers are losers level. You know, that's typical Robert Kiyosaki language. He likes to use these kind of words. So he called them the savers are losers. And who are these? I'm now reading. Many people believe it is smart to save money. The problem is that today, money, he has it in quotes, is no longer money. Today, people are saving counterfeit dollars, money that can be created at the speed of light. And he gives a little history here. He says that in 1971, I guess I have to read it because you have to understand why money is not good money anymore. So I'll read it. In 1971, President Nixon took the US dollar off the gold standard and money became debt. The primary reason why prices have risen since 1971 is simply because the United States now has the power to print money to pay its bills. Today, savers are the biggest losers. Since 1971, the US dollar has lost 95% of its value when compared to gold. It will not take another 40 years to lose its remaining 5%. Remember, in 1971, gold was $35 an ounce. 40 years later, gold was $1,400 an ounce. That is a massive loss of purchasing power for the dollar. The problem grows worse as the US national debt escalates into the trillions. Wow. Trillions of dollars. And US continues to print more counterfeit money. So I had to read that so you understand why he says savers are losers. As the Federal Reserve Bank and central banks throughout the world print trillions of dollars at high speed, every printed dollar means higher taxes and more inflation. In spite of this fact, millions of people continue to believe saving money is smart. It used to be smart when money was money. The biggest market in the world is the bond market. Bond is another word for savings. There are many different types of bonds for different types of savers. There are US Treasury bonds, corporate bonds, municipal bonds, and junk bonds. At some point, I'm going to skip some of what he's explaining, but let me read some of it. For years, it was assumed that USA or US government bonds and government municipal bonds were safe. Then the financial crisis of 2007 began. As many of you know, the crisis was caused by mortgage bonds such as mortgage-backed securities or MBS, also known as derivatives. Millions of these mortgage bonds were made up of subprime mortgages, which were loans to subprime or high-risk borrowers. Now, everything is explaining, I'm going to skip and get to where he says, because I wanted to read something about the bonds, that rising inflation makes bonds an even riskier investment, which is why savers only know how to save, which is why savers who only know how to save are losers. For example, if a bond is paying 3% interest and inflation is running at 5%, the value of 3% bond, if 3% bond crashes, wiping out investors' value. Now, I'm skipping a little bit again because I feel like he's explaining a lot. Okay, he brings in China. China could be the biggest loser of all. China holds $1 trillion in US bonds. Every time the US government devalues the dollar by printing more money and issuing more bonds, the value of China's $1 trillion investment in the United States goes down. In China, if China stops buying US government bonds, the world economy will stop and crash. What? Okay, he has a point why he's explaining all this. Now he's saying millions of retirees, people who are retired, are just like China. Retirees in need of a steady income after retirement believe government bonds were safe. Today, as governments, big and small, go bust and inflation rises, retirees are finding out that savers who saved money in bonds are losers. Municipal bonds are IOUs issued by states, cities, hospitals, schools, and other public institutions. One advantage of municipal bonds is that many are tax-free income. The problem is that municipal bonds are not risk-free. Millions of municipal bond investors are now finding out that the municipal bonds they invested in are in serious trouble. In the United States, more than $3 trillion is invested in municipal bonds. It's estimated that 2/3 of those bonds are now at risk because these public institutions are broke. If more money is not pumped in, the United States could implode from the center as states, cities, hospitals, and schools begin to default, just as subprime homeowners defaulted and stopped paying on their home mortgages. The bond market is the biggest market in the world, bigger than the stock market or the real estate market. The main reason it is the biggest is because most people are savers. Level 2 investors. Unfortunately, after 1971, when the rules of money changed, savers became the biggest losers, even if they saved money by investing in bonds. I'm about to end. This is the last paragraph. Remember that savers, bondholders, and most people who save money in retirement plan are people who park their money, investing for long term, while professional investors move their money. Professional investors invest their money in an asset, get their money back without selling the asset, and move their money on to buy more assets. That's why savers who park their money are the biggest losers. Now, that's the end of that. I don't know how you feel about it. I didn't feel very good reading it, but there is a big lesson. If you just park your money, it's a bad idea. So let's keep it here and learn from Robert as he's teaching us. It's better you buy an asset instead of parking your money. Especially now he's talking about bonds that you lose the value. You lose the value. So let's think about assets, be creative, and buy assets. Oh, that's me, by the way. I finished reading. What do you think about this whole thing about bonds? For me, I find it very boring. I don't believe in it. I don't believe in any investment that pay interest, by the way. That's a religious issue. If you are a Muslim like me, maybe you know about that. We're encouraged to make profits, not earn interest. This, if you're not a Muslim, I'm sorry that I have to mention this, but for Muslims, I have to mention it that we are not encouraged to invest in things that bring interest. You are encouraged to use your money to make profit. That's the better way. So now we are told bonds are not good. So I guess let's find other assets to put our money in. Please leave a comment for me. What do you think about this session? I didn't feel very good reading it, but I had to read it because that's a level number 2, savers and losers. Do you agree? Please leave a comment and like the video. Leave a comment, share it. If you have someone owning a bonds, want them, share this message. Like I'll always end them. I say, take very good care of yourself. Take very good care of your families. Take very good care of your health. Like the video, leave a comment. Take a step to a better you. Bye-bye.